Welcome to this edition of Northwest Real Estate Forum. I'm your host, Patricia Wangsness. Our passion is to help you understand the art, science, and timing of real estate by bringing you relevant topics and experts with up-to-date information impacting your biggest asset, your home. My guest today is Rhys Evans. Rhys is the Regional Sales Manager for Landover Mortgage and oversees 20 loan officers. Landover is a mortgage broker banker with in-house underwriting authority for FHA and VA and all other types of loans. With over 16 years of experience in the residential lending business, both in the trenches and in management, Rhys has seen it all and is the go-to person when there is a 911 call for help. Welcome, Rhys.
You bet. Glad to be here.
So there's been a lot of changes with underwriting standards and loans, and buyers are crazy and sellers are crazy and agents are crazy. And so what are the things that the lenders are looking for as far as a debt-to-income ratio? That's usually where we start.
Well, there's no hard and fast rule, and it can depend on the product type. FHA, USDA, VA, conventional, etc. So we usually use a ground rule of around 45% of their gross income, so before taxes. And that's a good starting point for any program. Some are a little less. If you have mortgage insurance, some mortgage insurance companies might want a 41% debt-to-income ratio. And it's up to the borrower if they want to disclose all household income or just their W-2 base income. You could have alimony or child support coming in, and that's up to them if they want to disclose all that. But we're going to use the gross income, whatever they give us, and we're usually going to ask for supporting documentation, pay stubs, W-2s, 1040 tax returns to back that up.
So you actually have to have more income than debt?
Believe it or not.
What a concept. I know. So in addition to that sort of debt-to-income ratio, you mentioned a little bit about the documentation that's required. I've heard and experienced in some transactions, at the last minute, the underwriters come back and they want something additional. Can you go over the basics again, and then what that might trigger as far as additionals? Yeah,
and that's changed a lot in the last couple of years. And it can be frustrating for a buyer that hasn't bought a house recently, because maybe the last time they bought a house, they had to provide a pay stub and a signature. So it's changed a lot. Back to kind of old school. Usually we ask for 30 days of consecutive pay stubs, 2 years W-2s or 1099s, and then 2 years of tax returns. And that could be personal and corporate if they're self-employed or they have ownership interest in a corporation or anything else. And all pages, so it can be a pretty thick package. If they have rental properties, they might have a Schedule E, and those can be complicated to go through. But that's what we're going to ask for income-wise. Asset-wise, we're going to ask usually for 60 days proof of assets. And whatever they want to disclose. So that could be bank statements, 401ks, pension plans, whatever they decide they want to disclose. We'll ask for 2 months proof of assets normally.
Now, is there a problem if they don't disclose some income? Does anybody say, well, why aren't you contributing that? Or
No, they have a right to. We always ask, of the household income, what do you want to? If they just want to tell us only their job, they don't have to tell us alimony or child support, etc. Okay. If there's mystery funds coming into a bank account, we do look at that. Where did these deposits come from? You're putting this amount of down payment, and we show from what you've told us and the documentation you've given us, you make, let's say, $5,000 a month. But you show deposits in your bank account consistently of $10,000, $12,000, $15,000. So we'll ask about what we call, in slang terms, mystery deposits. Where did that come from? Because if you're using those funds for a down payment, obviously we want to be able to track that.
Okay. So another big question that we get, and you're in a business where there's a lot of choices, and I'm in the business where there's a lot of choices. We hear terms, and we have to explain it to the consumer: a bank, a corresponding lender, a broker. Give us a little highlight of what that means and how it impacts the customer.
That's another area that can be very confusing because some of them are used interchangeably. And when I talk about banks, I usually traditionally think of a bank, and there's not a whole lot left, but the big, large national banks, and there's some regional banks. Now, as a correspondent, you could be a banker and be able to broker at the same time. And the pros and cons kind of a bank, well, they're large, they underwrite, they're used to doing a lot of production, They've seen a lot of deals. They have their own in-house underwriting, but the drawback is they have their product, their guidelines, and their price, and that's it.
Okay.
You know, they don't broker out and have as much array. A correspondent lender like Landover is, we underwrite for several different investors, and those could be the same banks on a national basis. But we underwrite, and they don't see our loan until we've packaged it up, funded it, and sold it to them after the fact. So the nice thing is that we have more choices because we have multiple investors. So if we have a borrower and they have anything slightly unusual about the deal, the property might be a little bit funky, we can change that to investor B or investor C if that meets that particular investor's guidelines better. So the nice thing is we have, let's say, 7 or 8 investors we can underwrite for, a little slightly different guidelines, so it might fit and tailor-made for that borrower. Different rates, we can choose who has the best rate that day, and we could change in between. So if a borrower provides a condition that throws it out of investor's A guidelines, we could then go and switch off to investor B, and really it's no pain to anyone because it's still funds in Landover's name.
Okay.
And then we sell it after the fact. So that's kind of a correspondent. And then a mortgage broker doesn't really have any of their own money, and they are brokering that out to a wholesale lender. And the drawback is they're stuck with their timelines, their product, their price, and it's not usually as flexible and as quick as, for say, like a correspondent would be. They might have to wait 2 weeks in underwriting, and we're 24 hours. So there are some drawbacks to being a broker. And once they submit to one wholesale lender, it could be tougher for them to change to another one. The second one, let's say it falls out of wholesale lender A, wholesale lender B might not take their appraisal, for instance. And there might be a new appraisal. So we don't have that as a correspondent. We don't run into that issue. So it's pretty complicated. But I think correspondent is the best of everything because we can bank it, use our own funds, bank the deal, then sell it, or we could broker if it didn't meet, let's say, Fannie Freddie guidelines, doesn't meet the debt-to-income ratio or the property or acreage or whatever, we could switch off and broker that deal as well. So we can kind of do everything.
Perfect. And the last thing, same scenario, we've had lots of deals come to the very end and the underwriters say, oh, gee, this is now important to me. So what are the red flags that agents need to look for and we need to tell our buyers about, and what do you guys tell your clients? What's a big red flag? The common ones, and then the 911 call, it's falling apart.
Well, it starts with the loan officer because they're the first ones to see the deal. And they're going to look at that deal, pull the credit, get the additional documentation from the borrower, and they're going to start looking for things that, I don't know if I'd call them a red flag, but could, want additional items on. For instance, we mentioned the bank statement, mystery deposits. That's a good example. If I look through and I see a deposit, I don't know where it came from, I could start, if I'm a good loan officer, on day one that you gave me that bank statement, ask you about it. Could you please provide documentation, paper trail of where that deposit came from? And that doesn't have to come in at the last minute. But a lot of loan officers or banks might not get that condition until it goes through their underwriting department, which could be 3 weeks later, for instance. Then you have the condition come up, and that's a common complaint that we hear from agents with various competitors that we deal with is, why is this coming up now? Well, to be honest, a really good loan officer, that should have come up day one. If they were really doing their job well, looking through the credit report, etc. What is this line of credit that you didn't, it's not on the application. What is that? So usually it's just more explanations of things that are a little gray. And it shouldn't come up at the last minute, in my opinion, unless that condition came up late. So let's say that we requested an updated bank statement, and the borrower gave me that bank statement 3 days prior to closing to prove where their down payment or their wire's coming from at close. Now that bank statement has a $20,000 mystery deposit on it a week ago. Well, now we have no choice. We're 3 days to closing, and now we're going to ask you to document that. And some people don't understand that. Why is this coming up last minute? Well, I just got the condition that beget another condition 3 days ago. So some things will require additional documentation, and some things are provided later in the game.
Terrific. Well, thanks. That's a really good explanation. That helps. Good. That helps me in my business, and hopefully will help you in your business.
Yeah.
Thanks for coming, Rhys.
You got it. My pleasure.
Thanks for watching this edition of Northwest Real Estate Forum. Whether you are buying, selling, or sitting on the sidelines, keep watching for important information on topics that are impacting your biggest asset, your home. For more information on this and our other shows, please visit us at northwestrealestateforum.com. Get your free copy of the National Association of Realtors 2010 Profile of Buyers and Sellers. This in-depth report tells you who is buying and selling across the United States and why. I'm your host, Patricia Wangsness. See you next time.